I have a client that was paying around 400 something. We were able to increase his allowable expenses. He purchased a new car, and that brought down his disposable income at the end of the month. So when we got done, he was paying closer to $40 a month versus the 400. That's a 90% difference. And because he's going to have those car payments, which are an allowable expense, because we looked at what the standards were, he's going to end up saving a significant amount of money on his payment arrangement because he qualified for a partial pay installment agreement. He lives in a home where, those expenses are taken care of. So technically, the offer and compromise wasn't a good solution for him, but the partial pay installment agreement was. You see how that works? Even though he wasn't able to give a lump sum, he's still essentially paying pennies on the dollar because he's paying around 10% of what he initially owed. So don't give up if you don't qualify for the offer and compromise.
Welcome to the Tax Relief with Timalyn Bowens podcast. Are you behind on taxes? Is the IRS threatening you or your business? Are you overwhelmed and confused about how to resolve your tax issues? Let's join Timalyn as she explains your options and how she may be able to help. Timalyn Bowens is America's favorite EA.
Hey, family, welcome to episode 46. Today, we're going to talk about the different options that you have to handle your IRS debt if you cannot pay them in full. Look, if you're new to the podcast, you don't know that I never present you with a problem without giving you a solution, right? Here at Tax Relief with Timalyn Bowens, we talk about how to satisfy the IRS without bankrupting you. With that being said, a lot of people feel defeated if they can't just pay the IRS a lump sum and have the debt erased. But that's not the only option. And while that is a valid option, the majority of people aren't going to actually qualify for it, right? So today we're going to talk about 5 different things that you can do. Okay. We are going to focus on the offer and compromise. Then we're going to take a look at installment agreements, which is what the majority of people do qualify for. We're going to look at currently not collectible status and then bankruptcy. Because, yes, some back tax debt does actually qualify for bankruptcy, but there's a certain criteria it has to meet. Because, of course, the IRS isn't going to make this easy on us, right? So, if you have received a CP 504, the IRS is letting you know they have the intent to levy because you haven't been doing anything. You are already on the losing side. Sorry to break it to you. You guys know I'm a straight shooter because not only are you in a position where you can't pay, you also haven't communicated with them. Look, the IRS is made up of human beings. We empathize with each other. Communication is key. Think about this. If somebody owed you money and you kept sending them messages and they kept ignoring you, even if they didn't have the money, you would be pretty upset. But take into consideration if somebody owed you money, yes, absolutely, that's your money. They need to give it to you. Would you be more or less upset if they were like, hey, I can't pay that amount right now, but this is what I can pay today? Now, for some of you heartless people, you'd still be upset, right? But for the majority of us, our main concern is getting our money back. And that's the same way the IRS is. So, the number one thing that you can do that you are probably doing right now, if you've gotten that CP 504, is nothing. And when you do nothing, you are essentially allowing the IRS to manage your cash flow because when they come in with a levy, they're going to decide how much they're going to take out each paycheck. If they're hitting your bank account, they're going to decide how much they tell your bank account to give them. And I say bank account, I do mean the bank. They can't speak to the bank account, right? But That's not a position that you wanna be in with money that you've worked hard to save and money that you've worked hard to earn, right? So, yes, if you continue to do nothing, you are at the grace of the IRS and or the state, and they can come in and legally clean out your account at any time if you've reached the point of getting a CP 504, okay? That's not where we wanna be. So the first thing I wanna address is the offer and compromise because that's what I get the most calls about, all right? So, again, if you're not new, you know I talk about the radio ads, the commercials where they say, "We'll save you. You can pay only pennies on the dollar." And like I said, that is true for some folks, but some folks is not the majority of folks. The offer and compromise has been pushed so much that there's a misconception that it's the only option. Let me break down what it actually is, okay? A lot of people also they call it the Fresh Start program, which really the Fresh Start program is something that Congress put in place to make it easier to negotiate your debt. But again, people connect it with the offer and compromise, and that's not all that it encompasses. So, when we're looking at the offer and compromise, you can qualify for doubt to liability, as to liability, right? So this debt's not really yours. Now, that's not always the easiest case to prove, right? Then we have debt as to collectability, which it means the IRS doesn't really have a good chance in getting this money from you. And then we have the effective tax administration. To see if you qualify for an offer and compromise, the IRS does have a pre-qualifier tool on their website. However, if you go back a few episodes, I talk about IRS Form 433. If you fill out a 433, you can see right there pretty much if you're going to be a good candidate for an offer and compromise or not. Because the IRS is going to look at these things. They're going to look at your ability to pay, all right? And when we think about your ability to pay, you need to factor in what kind of income you have right now. You also need to factor in your health, your age, and they even look at what type of education you have because theoretically, and I do have air quotes here, a person with a college degree is theoretically supposed to make more. Now, we know that's not always true, but the IRS does factor in those things as well. So, if we have a 34-year-old taxpayer who has a master's degree, they're actually working in their field of study, and let's say they're making $75,000 a year. All right, expenses aren't too crazy. They're 34, so the IRS is looking at them like you're going to be working at least another 30 years. Their ability to pay is good, right? Because their ability to earn income. The next thing that the IRS is going to look at is your assets. What do you have equity in? Do you have savings accounts? Do you have a nice car that's almost paid off? Do you have a home? How much equity do you have in that home? How much could you get from a short sale? Would it be enough to satisfy your debt with the IRS? What do you have in retirement and securities? When you make an offer, you have to make sure that the offer is a certain percentage is at least a certain percentage of the equity that you have in different assets. That is why we say when people own homes and they have equity in it, if they have a lot in securities and things, the offer and compromise is not going to be a good option because the IRS will ask that those things be liquidated to satisfy the debt if there's too much equity there. Now, it's the perfect solution for some people, but again, just not the majority. But if you don't qualify for that and have that slate wiped clean, that is A-okay. Fill out the Form 433F or A, or look at the IRS pre-qualifier tool. You'll see listed, okay, shoot, I have more in retirement than I thought. So if you have a tax bill that's, let's say, $30,000, but you're sitting on a retirement account that has six figures in it, yeah, that offer and compromise probably isn't going to be a good solution for you. Now, There will be people out there that will tell you different and will charge you a fee to actually, submit that offer for you. But remember, if you work with somebody credible, such as myself, we're going to take you through the process to see if you actually qualify. Now, if you have that income sitting there, but your ability to earn more income is gone, so maybe now you're disabled or you're elderly, those types of things are taken into consideration as well. But you need somebody on your team that's going to be able to help translate that appropriately to the IRS. So, if you don't qualify for an offer in compromise, again, there are still solutions. So we have the installment agreement, which I broke down in episode 10. This is essentially a payment arrangement, payment plan. So the popular installment agreements are the streamlined, regular, and partial pay. Partial pay personally is my favorite because yes, we're looking at assets. However, we're taking into consideration your income and your expenses. So, partial pay installment agreements is what we look at if you can't pay the debt off before the collection statute expiration date, which is the last day that the IRS has to legally collect on that debt. So when we look to see when that date is, if you can't pay it off by then, the IRS still wants as much as they can get from you before that. I have a client that I worked with that was paying around 400 something. We were able to increase his allowable expenses. He purchased a new car, and that brought down his disposable income at the end of the month. So when we got done, he was paying closer to $40 a month versus the 400. That's a 90% difference. And because he's going to have those car payments, which are an allowable expense, because we looked at what the standards were, he's going to end up saving a significant amount of money on his payment arrangement because he qualified for a partial pay installment agreement. He lives in a home where, those expenses are taken care of. So technically, the offer in compromise wasn't a good solution for him, but the partial pay installment agreement was. You see how that works? Even though he wasn't able to give a lump sum, he's still essentially paying pennies on the dollar because he's paying around 10% of what he initially owed. So don't give up if you don't qualify for the offer in compromise. Okay? Now, if you want to learn about different types of installment agreements, if you don't qualify for the partial pay, make sure you check out episode 10. The next thing, and I have talked about this on the podcast as well, is currently not collectible status. This is when you put your tax account on hold temporarily. All right. So in this situation, you're still going to fill out that 433 for the IRS, and you're going to show them at the end of the month, I have this income, I have these allowable expenses, but I have nothing left to give you. Listen, the IRS cannot put you in a financial hardship to pay your taxes. Now, from their viewpoint, your child doing extracurricular activities and things is not allowable. That's not needed because they need their money, right? So when I talk about allowable expenses, I'm talking about your rent or your mortgage. I'm talking about your car payment. The IRS can't make you homeless to pay them. That's the type of financial hardship that I'm talking about. With this, it does not resolve your tax debt. The liability still exists and interest will continue to accrue. However, the clock continues to tick on the statute of time the IRS has to collect from you. And during that time, you're protected. So while you're in CNC, currently not collectible status, the IRS will not levy you during that time. All right. And then you have another year that's fallen off. Now, at the end of that time, they will reach out and ask you to submit more financial information to see if you still qualify. But it's a very good option to get them off of your back. All right. Want more information on that? You can check out the full episode I did on temporarily putting your collection account on hold. All right. Now, last but not least, I'm not sure why I haven't done an episode on this yet. We do have bankruptcy. Okay. Bankruptcy will not be the right choice for everyone, but it can be very effective for those that qualify to use it to eliminate their debt. So think about it. There's no reasonable contribution potential, no fight with the IRS, no appeals, and sometimes bankruptcy is even cheaper than messing with Uncle Sam. Now, I'm not a bankruptcy attorney, so I'm not going to get into all of that, the different chapters and what have you, but I'm partnered with bankruptcy attorneys that I refer clients to when bankruptcy is a good option. This is what you need to look at to see if you qualify. We have the 3-year, 2-year, 240-day rule. You can't have any fraud on your account, no trust taxes, and no SFR. So that means no substitute for return. When we look at the 3 years, the debt that you are looking to have discharged must be at least 3 years old. All right. So if you owe for 2022, today that debt is not going to qualify. So if it's at least 3 years old, let's say maybe it was filed late, it had to have been on record as filed with the IRS for at least 2 years, okay? Then after that 2 years is up, no additional assessments for that tax year can have been made by the IRS for the past 240 days. If you meet all of those qualifications, that tax year is eligible for bankruptcy. But here's the thing. If the IRS has already issued a tax lien on that debt, then that means even if that debt does go into bankruptcy, you will have to pay back the debt that has the tax lien attached to it. All right. But like I said, that is an option. Again, not going to be a good one for everybody, but it's excellent for the people who do qualify. So if you were sweating and panicking, like, oh my goodness, I don't qualify for the offer and compromise, that's okay because you still qualify for some other arrangement. Now, the last 2 people I spoke with about arrangements, they said, "I am so glad that you love to do this and that we are working with you." If you're in a spot right now where you feel backed up against the wall, I need you to settle down and breathe. I would love to see if you're a good fit to work with me at my firm, Bowens Tax Solutions. We specialize in doing this stuff for our clients, guys. Typically, we work with people who owe 6 figures or more, are facing an audit, or they're actively being levied. We don't want you to get to the point of being levied before you give us a call. You can visit the website at www.bowenstaxsolutions.com and book your discovery call today. But even if you don't come with me, make sure that you do get the help that you need because back taxes shouldn't ruin your life. I'd like to thank you for taking the time to listen today. I'd like to thank Jim Ray Consulting Services for helping me get this message out to you. I hope you found the information helpful. Did you know 1 in 50 people have a tax problem? Please share this episode with your friends and family because you never know who may need help. Again, thanks for listening. Hey, just as a reminder, this podcast is for informational and educational purposes only. It provides a framework and possible solutions for solving your tax problems, but it is not legally binding. Please consult your tax professional regarding your specific tax situation.